What? Huh? What? My ears are ringing. All right, cool. Good morning, everybody. It's time to get on with it. Welcome. It is a Wednesday, hump day, as some would say. I call it oil inventories day or kitty cat day. Call it what you must. It's 8:00 something in the AM, 8:03 it looks like. So we got to get ready for the New York Open. Welcome to Forex.Today, the YouTube community of 17,500 foreign exchange traders. We get here to align our satellites, coordinate our watches, sync our strategies. 3, 2, 1, let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Thank you for being here. Thank you for asking questions. Thank you for getting involved. Thank you for sharing positive energy with our community, treating our fellow currency traders with respect. What's going on here? Whoa. Anyways, I guess we'll leave that. Whoa. Weird, huh? How about that? Nope. Hey, maybe it's this one. I can move this one around. Cool. That's a little better, maybe. Anyways, ask questions, and I will do my absolute best to respond. My name is Wayne McDonald, and I've been trading currencies for almost 20 years. So I've seen a few things. I've learned a few. Did a few things good, made a few mistakes along the way, and I'm willing to share my experiences with you with the raison d'etre of helping you A, survive, and B, thrive. How are we going to do that? Well, how about using a combination of fundamental and technical analysis to put together trade plans, not just for today, really, more specifically for tomorrow, next week, the rest of the month, the rest of the quarter, and with an outlook over the year. So again, strategic and tactical Forex trading strategies. I'd also like to thank Traders Way for being a part of our community. You're a trader, you're going to need a broker. Why don't you give Traders Way an opportunity to earn your loyalty and respect? You simply do that by visiting tradersway.com, download a demo account, play some trades, and what you want to see is fast execution speed, narrow spreads, big swaps, and if you need a world-class customer service, and they've earned my loyalty and respect, and I've seen all those good things over there. They've also survived the Swiss National Bank debacle, which blew out other brokers that were maybe unscrupulous, trading against you maybe. So some of those brokers went out of business that day, and Traders Way was just fine because they actually entered your trades into the interbanking system, and that's a good sign. So tradersway.com. It's going to be important to you one day, I'm telling you. If it's not now, it will happen. Okay, where are we right now? Yen is weak. Yay, finally. Dollar is strong, but Swiss franc is strong. I mean, dollar's weak, but then Swiss franc is strong. Wow, what an amazing switch of correlation. Complete opposite from 5 years ago, let's say. Very interesting. Kiwi's down, Aussie's up. Something obviously is going on in the NZD. Pound has gone from mediocre to back to some strength. That's cool. Kitty CAD went from weak to kind of regaining, and Euro still mediocre. All right, well, it's an improvement. Okay. PZ. If you need any of my indicators or chart templates or profiles, EAs, they're available at metatraders.com. This one is in the complete toolkit. Okay, most of the stuff is in the basic toolkit. All right. So, anyways, yada. Let's take a look and let's take a look around. Let's start with dollar pairs. Look at that piggy. Okay. Piggy, 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 can't you see? So we're back up into the zone. Check that out. Isn't that just beautiful? Up, 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 down, down, buy. 21.55 cross on the 4 hour, 21 acting as support. We also have the swing zone. So bears would have sold here, bulls would have bought there, and bulls won. Remember, at the time, you don't know which one's going to win, but you should know which team you're on, at the very least. Okay? So now what? Well, now it's Oscar Mike, so trading it high would be unadvisable. But if you're a bull, maybe between now and Monday. So it's only Wednesday, okay? But you still don't want to buy high. You want to buy low if you're a bull. So you're going to look at a couple of things. One, you're going to look at next week's pivots, but you're also going to look at, using price technicals, you're going to look at role reversals, right? So you're going to say this used to be resistance. And by the way, it's a standard breakout type strategy. So, resistance, okay, breakout, pullback, gone is probably what you're planning. Whoop. So for those that stayed bullish, congratulations, you finally got paid, okay? It's been on and off, on and off. Cool, now taking a look at this is now weeklies, dailies. These are dailies inside of our monthly plan, if you remember that. So somewhere in here, we had a monthly buy zone, and now these are dailies, okay? So now you get this big bullish move. I think that was non-farm payrolls. And remember, we talked about buying dips after that. So a higher high creates a higher low, which creates a higher high, okay? Higher low, check this out. Okay, that's the daily buy zone, front running. And now you're up here, and maybe you got this for tomorrow. Okay? It didn't expand as far as it was supposed to, so it might just be waiting for this 55 to catch up. The 21 to catch up. So you could think of it this way. And if you don't like pivots, for example, you might see it like this. Okay. The way I look at it is you can take the time out of it and just use the price. Okay. Cool. You should check your other pivots, your weeklies as well as your monthlies to get an understanding of where you are. Okay. All right. Kiwi's getting crushed here. You should probably mark this so you don't step on it and ruin your new shoes. Okay. So we got something going on there, and we already have this marked out, role reversal, right? So a breach below this would be technically significant. And the way that a bear would play this, of course, is the bearish engulfing candle, the lower high, and then you'd take this down if you're a bear as a lower high, lower low. Okay? Bulls are going to try to keep it neutral. And there you say, okay, you can have this part of the dance, but they're going to want to protect this. Oh, no, wrong one. They're going to want to protect this. Okay. Okay. So plan A for a bull would be to look to buy sort of in here. And it probably look more like this if you're a bull. And bears, of course, are doing the opposite. Okay. And maybe like bulls would be buying this low, but they got to get in before the mean. And, of course, bulls want to then catch the next role reversal. Wow, my speakers are way too loud. Hang on. That was just crazy loud. What are you doing listening to Metallica at full blast at 5 o'clock in the morning? It's still too loud. Hang on. Whoa. Okay. So this is sort of a real test, honestly, a real test for the bulls, because it gets really, really complicated for a bull if you go lower than this. So this is really, I was saying down here is the next one, but it's really not wanted. Okay, not wanted. Let's change something here and see if it lines up on a different time frame. Okay. Okay. So someone's going to try to take this. Okay. So you might say, all right, there's the double bottom on the M2. This is the breach of the central and the retest. Okay. And then higher up is where we're going. So again, you're going to have to filter this information because really it's sort of a mediocre situation for both bulls and bears. You have to reaffirm your conviction for direction. Okay, so if you were buying here and here as an M2, then you are taking it to M4, so now you need to just man up and do your job, or girl up, right? You got to lean in, ladies, and take this where you believe it's going. Okay, so reaffirm your conviction for direction. Okay, what you probably want to see is like end up here on Friday, and then sort of okay. Now, if we ended high, all these things have to pull up, right? So your central would be about here, and your next week's target would probably overlap. Okay, remember you don't see that right now because most technical analysis is backward looking, so you have to see through this, right? See the matrix and say, okay, we're going to pull this up because of macro, and then the technicals will follow the move, and then therefore this will move up and this will move up, and therefore, you know, I'd be buying here. Okay? So in that case, this would be, I mean, the best thing would be this would hit Thursday and you'd be buying it down here on Friday. Okay? But you're not going to be in the game if you're not doing something now. So are you a bull or a bear? I don't know. Well, forget it then, right? If you're a bull, this is your time. It's not a great setup, but it's probably due to relative strength. Huh? There might be something better for you to be on. But you can use that in your analysis. All right, so a little bit of improvement on Kitty CAD. CAD got punished because of the bad CAD jobs report. Notice now that we've hit the projected target as a bear. Okay? You see that? This is the predicted target. So now you're on Wednesday and you're like, oh, look, now the CAD's strong. Well, where were you over here? When it was triple, quadruple topping. So anyway, so it's recovered from its bad jobs report, or maybe simply oil prices are high and that's good, or whatever. Okay? You know what I'm talking about? Okay, so now if you are a bear and you look at this and you say, okay, now I'm a bear. I'm not a bear up here, which I get it actually. This is a rollover, you know, an old man type setup. But at the very least, you should say between now and, you know, Monday, or, you know, now and Tuesday, okay, or whatever. In the next few days, you probably want to sell higher than we are now. So how about like you throw down a midpoint psych level? Okay, so 2750, you would take a shot, right? Or if it heads a little lower and then comes back up to 27, would you sell it? So now, so you see how we're now not concerned with where we are in the moment, but where we're going to be in the near future. Okay. Theta, I've addressed that multiple times in the swing trading group. We actually went back through history and pulled data from the Fed to talk about it. So if you're in that group, go back and watch some of the videos. If not, join the group. Okay? Cool. All right, so it comes down to if you're a bear, okay, if you're a bear, you think if it goes lower, you're going to sell higher. And if it doesn't go lower, you're going to sell higher. Okay? Okay? That's the cool thing about being a bear. You know you're going to sell. You just can't sell at support. So you can sell at this resistance or use current support in the future as resistance. Okay? You see it? You got it? Cool. So now while we're on kitty cat, let's look at commodities because of oil, right? Okay. Daniel wants to know about unwinding. How is the Fed going to unwind? What mechanism are they going to use? I'll answer it that way. Meanwhile, oil is Oscar Mike again, and no pullback in the moment. Okay. There's probably going to be a pullback at some point. There probably should be. We're now over the normal expansion for oil. So it should have gone from 51 to a projection of 58. So it's done what it's supposed to do. Up here is less probable. Okay. All right, let's go back to Daniel's question. Daniel, how are they going to unwind? What mechanism do they use? Yeah, but that's not unwinding. They bought bonds. How do they get rid of bonds? No, they just mature. They don't do anything. Yeah. No, they don't sell them. They just mature. They expire. So will that impact the dollar? Well, it depends on what people do when they get their money back. Okay? That's the beautiful thing about buying bonds. They expire automatically. They mature. How is the Bank of Japan going to unwind their positions in the Nikkei? I have no idea. Okay. All right, we go to Biddy. Okay, why did Bitcoin expire? Why did Bitcoin stop rallying up here? And why do we have it sort of a bullish setup for next week? Okay. Theta says, but not many will hold the bond till it matures. Why would you say that? Why would they sell it? Why would they enter the market to sell? Why, to make money? That's not their goal. So they put the money in the economy. They're not interested in taking the money out of the economy. They're just going to let them expire. It'd be strange to do otherwise. Okay? Yeah, Daniel, depends on who bought the bonds and all that kind of stuff. But, right, we'll deal with it when we get there. But, you know, it's a while out there, and it probably won't do anything. No, it wouldn't be the reverse of QE. No, because it would be nothing. Okay. Okay. It wouldn't be a form of tightening. Okay. So we have to add a layer here. Let's do it this way. Insert indicators. What should I do? I'll throw monthly on here. Okay. You see? Isn't that amazing? The reason it stopped right here is it was supposed to stop here. Greg says stopping the buying would be a tightening. Well, sort of, less loosening, but it makes a floor or a ceiling, is what it does. Okay. So isn't that interesting, guys? Even Bitcoin trades technically. Okay. Here's the central pivot. Here's the target. Holy smokes, huh? Isn't that interesting? Central pivot, target. That's right out of the book, by the way. See, if it was M2, we would have M4 as the target, but it wasn't M2. It was the central pivot. It hit the target and stopped. Cool, right? Now, would you like to know next month's pivot points? Okay, that's a pretty good idea. I like that. Boy, I haven't messed with these in a long time. Let me get rid of the Fibbits. This might just be the wrong indicator. Content. Plot future pivots. Oh, they're just not there. Ah. All right, cool. So, see the plan I made for you 2 days ago? It's still valid. Come down, buy it here. Round what? What is this? I don't even know what this is. 43, 44. And the target now is 55. Okay? So what is this? 42 maybe? Right? This area here predicts 55 or higher. For March. For March. Okay? And you've known that for 2 days now. So I hope you're planning. Theta, we are currently in an environment of zero interest rates. Yeah, but we have been for 10 years. Yes, I will do gold. How many people here are now paying much more attention to planning tomorrow, next week, next month? How many people are doing a better job of having that type of focus? Where you're you already know today because we did that yesterday. Right? Like, we already did that yesterday. You should already know. Like, why would we talk about it now? You're tactically taking the trades, I'm assuming. So if you got today's trade plan already written down, like you have it written down, like, here's my trade plans for the day. Cool. So now, as a group, now we're talking about, well, okay, what about tomorrow? What should we do next week? You see that? Cool. Way. I need to start buying small watches. Stupid watches. They're too heavy. They're too big. All right. Okay, cool. So that's what I'm saying. My oh my. So WTI is unusually overbought. And Brent is doing sort of the same, so there's a real catch-up going on there. Okay. Oh, you guys want to do CPI? Oh, okay. All right. Trade. We'll do your CPI. Maybe we don't know the trend.
You're listening to
Anyways, let's see
Trade.
what
Please
happens.
click on your
Just over a
Trade the
minute to
News
the bottom
tab now
there.
to activate your
January
global
CPI data for the
FX.
U.S. Month-over-month expected 0.3%.
It'll be so radically
Ex-food and energy
important.
expected 0.2% year-over-year.
All right.
CPI seen at 1.5%. Headline.
So I just
core.
opened Trade the News, that's all. Gold. Okay, gold. Simple enough, right? What are we doing in the moment? Is it bullish or bearish? Statistically speaking, it's bearish. Are you a bull or a bear? See how this logic works? Data, but you're worried that you're paying too much attention. But the thing with fundamentals is, like, I made a decision 6 months ago, more than that now, 8 months ago, and it took me 1 minute. So, like,
Look at the January CPI data in just a few
paying
seconds.
too much attention to it, I mean, I spent 1 minute, like, I'm done. So I'm done with my fundamentals, right? That's why I'm like CPI. What's gonna happen in CPI that's gonna make the policy change? Nothing. So, like, it's almost irrelevant now. Okay? Now, if a trend in CPI changes, therefore the central bank needs to update its policy, holy smokes, now I got to pay attention. But it's going to come out about right.
CPI ex-food
You
and
understand that?
energy,
What if they're expecting
0.0%
1.2 and it comes out 1.3? Holy crap!
0.2%
Change everything!
inflation.
like, what's going to happen? What's going to happen?
Year-over-year at 1.4% is 1/10 lower than expected. Core at 1.4% as well is 1/10 lower than expected.
What did I? Now I think I killed my speaker completely. Now I didn't hear any sound. It's 1.4 versus 1.5 expected. Well, forget it then. Give me all my money back.
Is in line with expectation again. Core at 0.0% is 0.2 lower than expected, and year-over-year readings both at 1.4%, 1/10 lower than expected.
So, yeah. Well, forget it now, right? Forget it. It came out 1.4. Forget it. Change everything, guys. Throw it out. Everything we've been doing all week, all month, just throw it out. Let's go the other way. Like, dude, look. I'm a bear on the US dollar. Gold is going to go up. You understand that? Okay, so let's take a look. Is it bullish now? No. But when could you start buying? Okay, well, that happened 3 weeks ago. Okay, so now we got the higher high, now we got the higher low, and right now, let's go a little lower. Do I really want to be a buyer when we're below below here, let's say? No, not really. Oh, but wait, it's going up right now. It's going up on the 15-minute chart. It's going up. You know, just back out like even an hour and find out it's still a lower high. So you could trade it, of course. Go ahead. You're right there. Make a move. Okay. Once again, I'd say that's pretty late because we're just breaching this high. But if you want to make the move because of CPI, if that gives you the strength, I would say you're very late. So I'm not sure I would call it strength. If you were, okay, if you were really a bull, this would be the price, but then you'd say, well, technically this doesn't look good yet. Okay, then don't buy it here. So now you're like bullish. So should you buy it here? No. Why would you buy it here? So you can go to here? Like that's what you're, that's what you're doing? Seriously? You're going to buy it here after the news and take profit there? Well, that's up to you, man. You can do whatever you want. If that's what you're in it for $40, okay? It's not even $40, right? You're in it for $25, then go ahead. You're trading the volatility. Okay, that's fine. Go ahead. You can do that. I'm not talking about the volatility. I'm talking about the fundamentals, right? So I'm saying gold is going to go to 2,000. And you're saying, well, it's going to go from 1850 to 1875. Okay, we're probably both right. That's up to you. But what I'm also saying is if you want to take some risk out of your trading, you would combine these two, okay, and say, dollar has permission to weaken based on the news that we're getting, the economic releases. CPI is on trend, for example. It's a little disappointing, but it's on trend. What does that mean? Well, we went from, deflationary, or let's say we went from inflationary to disinflation to deflation, and now we're reflating. But guys, we've been on the reflation trade for 6 months. So fundamentally, nothing has changed except our overall strategy has been confirmed. And then other people will freak out, but the dollar's been strong for 5 weeks. They're like, dude, it's supposed to be strong, son. We knew that. It's obviously strong for normal reasons. And now, what we discussed 2 days ago is tiptoeing back in to the reflation trade. So once again, we already know this. I covered it on Monday, for example. How to take your big trades, your position trades, which are telling you, hey, US dollar was strong for 5 weeks straight. So if all you did was follow technicals, it would say, well, the next 5 weeks the dollar's going to be strong too. What I was saying based on seasonality and fundamentals is, well, that might be true, but using seasonality and fundamentals, starting with fundamentals first. The dollar's been strong for 5 weeks. I don't care. I don't care. It's irrelevant to me because I'm going to be shorting the dollar for 5 years. You see the disconnect right there? The dollar's been strong for 5 weeks. I don't really care because I'm going to sell the hell out of it for 5 years. 250 more weeks of me selling it. So it was strong for 5. Well, isn't it nice to have known that it was going to happen before it happened? Therefore, we could adjust our portfolio. Well, that's what occurred. So now, over the next 5 weeks, here's my radical prediction. It'll go from dollar has been strong to dollar should be weak. Once again, we've covered this, right? And especially when you go back to NFP, people are like, how do I interpret 50,000 jobs? Is that horrible? I'm like, no, it's good enough. So now all I know is in the next 12 weeks, dollar should weaken. Was it 12 weeks? Is it 8 weeks? Is it 3 weeks? Is it today? Yeah. Okay. So now when we look at gold, dollar is weak. I know. So now what? How do we get out of something that's been this way to something that's going that way? And that's where you use technical analysis, of course. And that's why we love technical analysis. Because at some point you will need to make a decision on when you tiptoe north. Now, I've explained that this is probably going to happen, and it'll come back down, and we'll probably have another chance to buy it again 5 weeks from now. But I covered that, I believe, on Monday. So I hope you're taking notes so that we don't have to repeat on Wednesday what we covered on Monday, right? Which means now you're simply carrying out the plans that you've already created. This is what I'm harping on. Not that I repeated myself. I've been repeating myself for 15 years. What we need to do is say, well, are you using that information? Are you actually creating your own plans and your own strategies? And are you ready, willing, and able to carry them out? Or are you watching CPI come out and say, holy crap, I guess I should be buying because CPI was 1.4. Well, and next month it'll be 1.5. Cool, that's great. Good, that's the trend. But when are you going to make the decision? Right, Mr. Trader? Right? So that's what I hope you take notes. And then when the webinars or streams are over, you sit down, look at your charts, and you think. You gather intelligence like reading central bank reports, and you think. Okay? It shouldn't take that long. And then from there, you carry out your daily mission. You know what I mean? What happened to the jet guy? Apparently, he was not 100% truthful And people didn't like that. So I don't know anything. But apparently he would send out alerts after the trade happened and said, see, look, we told you you could have made $10,000 on this in 3 minutes. And they're like, wait, you sent me, I got that email or the text or however they sent it out. They got it like 4 hours after it actually occurred. And he's like, see, look, we all took it. And of course, he didn't actually take it either. So it was just kind of weird. So he had let's say, a less than reliable alert service, I think is where he got into trouble. It wasn't the education. It was, they had an alert service that apparently was not 100% truthful. And that will get you into trouble. Okay? Okay? Yeah, they're picking trades after and then sending it out. So, I don't know. I did read the lawsuit, though. It was pretty interesting. But all right. So again, let me just kind of wrap up what I was saying. I hope you listen to the message that I give, that from that you make your own decision on direction. And from that, every single day you simply trade that decision. The fundamentals for me change every 5 to 8 years. It's not that complicated. So here's what I would say. If you knew on Monday you were a buyer, okay, then you have to say, do you want to buy this? It's support. Well, on a higher time frame, it's support, but on a lower time frame, it's not support yet because it's trending down. Well, you can still do it if you have conviction for the longer term. And of course, this might be a monthly pivot, this zone. This could be a weekly pivot zone. This could be a daily. But you're still just making decisions. Okay, you could have bought that. I'm not saying you should have. You could have. I probably wouldn't have because of this lower low. But we know that lower low is supportive because we also see this one. And we also know on the long run it's going up. So it's just your decision like, when do I buy? I'm a buyer, but when do I buy? Okay? So the next one would be this is going to go up and hit resistance and stop going up. Why? That's why you think it's resistance. If you don't think it's resistance, then it's just going to go straight up. But I'll say, you know what? It looks like there was resistance there in the past. I think a bear would try again. So I think it'll go up and down. Now, if you're a bull and you drop into a weekly or a daily trade plan, you might end up then taking it north up here. So whether it's probably not going to be today, it could be tomorrow, it could be next week, but you'd be probably a buyer of a dip here, right? Cool. Now what you would prefer, and it would be so obvious, like a slap in the face, and while you're holding your face, someone kicks you in the shin. Now you're like, oh, you son of a... Well, you would notice all that, right? Right? You're like, oh my God, what the hell did you do that for? Well, because it made a higher high, so you know you're going to buy the higher low, and it's just stupid easy. Ridiculous. Okay? Because there's no way you're a bull and you're going to miss that. You just can't. It's impossible. I don't believe you could. Okay? Unless you're not a bull, and therefore that would be your problem. Okay, cool. Cool. Sorry for sounding pissy today. I don't know why I'm feel pissy. I'm tired, I guess. I don't know. I need to pretend I have empathy. I'm sorry. Sorry. I need to practice my faking empathy. Ridiculous. All right, yeah, so I do apologize. I know I sound pissy. I don't mean to. I probably am pissy, but hey, I hang out with you every single day. Even once in a while I get in a mood. Silver, too Oh, the Adams on the 200-day MA on Goldie? Let's take a look. Because it's an old market, there's these old trading strategies, right? So that's interesting. So let's just throw down the 200 simple. Oh, so are you saying as a bull or as a bear? Let me read this again. Bulls would be long the hell out of it on the 200 EMA cross. So I switched it to simple. And so you're saying a breach and then a pullback. So I'd end up trading it exactly the same way. Okay. Right. I would, oh, come on, click the right button, son. All right. I would still sort of breach it. Of course, that's hard to see. Hang on. I would kind of breach it. Now I know why I'm pissy. I can't even get my drawing tool to work. I need to get more sleep, I think. All right. Up, down, kicking off the future. Okay, 200. Okay? And I would long bomb that. Okay? I think you're saying something to this, right? Okay. Aaron, yeah, maybe, huh? Cool. Well, thank you, Raymond. I guess we'll do exotics. So now I have 1,162 pips. Not bad, right? So my trade I made on Monday is now up 200 pips. And my trade from 3 weeks ago is up 555 pips. And the one from 2 weeks ago is up 375 pips. Huh. Whale oil B. So this account has made 150 pips while I slept. Do you understand that? So one of the messages I've been teaching both the Forex.Today community and the FX Bootcamp community is that you need to make sure your trades are worth more, that your trades are more valuable. And the value creation is planning. Your plans should set up trades that are worth more, not more trades. You don't make more money because you trade 10 times more trades, or you don't make more money because you take bigger lot sizes. In fact, I preach that you lower your lot size. So how do you create more value? Well, the trade plans you create are just more valuable. They're worth 300 pips, not 30 pips. And so these are, now the difference is well, one of them is it's asset appreciation. Okay, you don't buy an apartment building so that you can collect 1 month's worth of rent and then sell the apartment building. Okay? You're like, well, I got that 1 month rent. Okay, but you also had your costs and expenses, and you may not have made any money. Okay? So one of the things you want to do is you want to buy the asset and let it appreciate. Well, how do you know it's going to go up? Well, that's your value creation. How do I know the South African rand is going to go up in value over time? Well, isn't that the question you're supposed to be answering? How do I know? Okay? And since I got that right, I've created value. So that's that. The second part is income. The rent, not just the value of the apartment building going up, the street value of selling the apartment building. So, for example, an apartment building in 10 years should be worth more than it is now. I think we all agree with that. And you're like, well, how does the value go up? Well, you can invest into it and make it better, and then because you made it better, you can raise the rents. And if you've raised the rents, then your income has gone up, and therefore, based on just simple time value of money, it is worth more because you have higher rents. But even if you didn't do that, if you just maintained it, well, there's also the beta, so to speak. The real estate market increases 5% a year. So 5% in year one, 5% in year two, 5% in year three, 5% in year four, 5% in year five. So 10 years goes by, you can sell it, and the building, even though it looks the same, might even have the same paint, okay, is now worth significantly more. What did you do? Nothing. So you can sell that. That's asset appreciation. The value of the South African rand is going up every single day. I'm not doing anything. I'm just an fat old white dude with gray hair. But for some reason, my assets, I own South African rand, are appreciating, and I will benefit from that. Now, the second thing is you collect income. It's like rent. Now I collect rent as well. So how do you kind of get to the next step if you're technically pretty proficient as a trader? Well, instead of just focusing on asset appreciation, in this case, really, you're turning your asset into income. So you're going to buy like the euro dollar today, you're going to make $300, and you're going to exit. Now I'm like, well, what do you own? You're like, I don't own anything right now. I sold everything I own, and tomorrow I'm going to reinvest a bunch of money, and then I'm going to get out of that, and then I'm going to be back at zero. So every single day, you're just flipping, right? You're just flipping. In a different way, what you could do is you could add a little, and build a portfolio of assets that not only go up in value, that may also pay you income through swap. And is it a lot? Percentage-wise, it's a lot, but ultimately, absolutely, it's little, right? So I made, an extra, let's calculate this, 20, 30, right? So in a month, I'm going to make like $50 a month, which is nothing statistically, right? Nothing statistically, but if you look at the absolute value over the course of a year, it's 250%. You're like, well, dude, that's pretty good. You're like, yeah. But of course, right? I've already made that. I can cash out now and say it's the same as holding it for a year, or I can do both. Okay? So, taking the message and repeating it so that it's clear, trading more to make more money is not necessarily the right strategy. Trading bigger trades so that you can make more money is definitely the wrong strategy. But focusing on planning so that your trades are worth more, they're worth 300 pips, not 30 pips, and you simply allow it to run, meaning you allow the appreciation, and if there is income, you can collect the income too, icing on the cake. So now if you focus on planning more and planning better and taking trades that you can stay in longer, then you can benefit by things like, I slept for 24 hours, right? I woke up here today and I'm up 150 pips. What did I do? Nothing. Oh, and I collected some interest. 150 pips for a scalper is a pretty kick-ass day. I didn't do anything. These trades made 150 pips total, right? 170 pips total, and I'm not doing anything. But if you cleared your pallet every single day, right? Like every day you're in 2 or 3 trades and then you take profit. So tomorrow you show up and you have no trades open. Okay? It's equivalent to being a potato farmer working all year, and then you go to the market, you spread out your blanket, you sit there, and you wait for people to walk by and buy your potatoes. They buy your potatoes, you get some money, they get potato, and now what? Now you're out of potatoes. And you got to go back to your godforsaken part of the earth and plant some more potatoes so next year you can, again, you can go back to the market in 6 months and sell potatoes again. And you're never getting anywhere. You're never getting anywhere. 10 years from now, you'll be as rich because you're still selling the same stupid potatoes. Right? It's not like you have 10 times more potatoes. Anyways, wow, I lost data. So once again, I think YouTube just pulled the plug. They're like, stop talking about potatoes. So anyways, what you want to do is compound. You want to compound, you want to compound, you want to compound. And if you're going to get that strategy right, you're going to have to do research and actually think about it. Yeah, Jim says, yeah. Well, I think, Jim, you realize you'll never get out of it. The only thing you could hope for is that your children don't have to suffer the same thing. Okay? Yeah, I'm interested in that, Raymond. I need to know what's going on. First of all, I want to make sure you're good. Second of all, I want to make sure the people that we've been discussing are good. And then third, are there opportunities to work? COVID is shutting a lot of things down. It's hard to do these deals. No one wants to meet. No one will do it unless they meet face to face. So it's tough. What if you do enter swing trades? What time frame? Oh, yeah, probably a 5-minute chart. Yeah. Okay. No COVID. No rookie. We're talking about something else. Okay. Right. So thinking about it this way, rookie. What if you were trying to raise a fund? You want to raise $1 million this year so that you have some assets under management. Okay, you're going to have to meet people you don't know and convince them they should invest money into your endeavor. Well, you call them up and they're like, well, I got everything in the stock market and everything's up 30% right now. And I made a bunch of money on Bitcoin, so not really interested. And you're like, whoa, hey, well, let's talk, because what you want is not just these, fly-by-night, exciting little trades that hit the news. What you want instead of degenerate gambling is consistent returns with low leverage and low volatility over longer periods of time, sort of money you can count on. And they're like, well, okay, that sounds pretty interesting, but I don't know, with COVID and stuff, like, I don't want you to, I don't want to fly out and meet you. I don't really want you in my house. I'm not really going to the office anymore. Why don't we just wait? And it seems like, right? It just seems that's the world in general. And I wouldn't blame anybody. Okay. So here, like another example, let's say I want to sell you a $25 million diamond. Would you like to see it first? And there's the problem. Now what? Who's going to see it? How do you set up the meeting? Who's going to be there? The gemologist doesn't want to do it and all this kind of stuff. And people are like, I just don't want to do it this year. Well, let's just buy it next year. Let's talk next year, bro. Right? Like, my auntie's sick. I don't have time for this, right? Like, later. Okay? So Forex isn't shut down, but you have to understand the trading of Forex is not shut down, but the human side of you meeting somebody you don't know and then earning their trust, their loyalty, and their respect so that they can hand over copious amounts of money. You see? So then they're like, we'll do it next year. Okay? So, but yeah, trading never sleeps. All right, cool. Yeah, there's big problems for sure. Big problems. All right. Yeah. I wouldn't be so sure about that, Daniel. So when I say people are in restaurants where I live, I'm not talking like I'm talking normal people, right? Now, technically, this area is quite wealthy compared to the average of America, but I don't think people in my neighborhood are that rich. But then someone else would come by and say, holy shit, these people are rich. So I don't know. There's differences, but statistically, there's not very many rich people, right? There's only, 1%? And the funny thing about America, the 1%, they only earn $350,000 to be in the 1% of America, right? Right? The thing is, that's good. That's good in America. $350,000 a year is good, but it's not like that's not FU money. That's not big baller rolling money. That's like you're saving hard for retirement money. That's cancer will bankrupt you money. That's divorce will bankrupt you money. Like it's the top 1% of America. But remember, America is going through income inequality, right? So what this means is most people, even professionals, like let's say a pilot makes $350,000 in the senior part of their career. And they live in a nice house and they live in a decent neighborhood and they have a couple of toys, right? And they vacation a lot, especially with their free. But they're not like FU rich, right? They're not Lambo rich. They're Mustang rich. Okay? So what does it also mean? It means how much does the top 1/2 of 1% make? And they're making like $2 million. Now, how do you jump from $350,000 a year to $2 million? Can you think of a regular job where you have a salary and you make $2 million a year? No. Can you think of a job where you earn $350,000 a year? Yes. Lots of professionals, senior executives make that kind of money. But how do you make $2 million a year? How do you jump from the top 1% to the top 1/2%? And it's virtually impossible. And then how do you go from $2 million a year to $20 million a year? And now it's like statistically it is impossible. But there are plenty of people that do it, right? And the way to do it, of course, is stock options, inheritance, or entrepreneurialism. Okay? Okay. Investing, yeah, over long periods of time. But really the answer is ownership. The true answer is ownership. What do you own? Okay? You own a house, you own stock in a retirement account, you own stock in a fund account, you've invested into some hedge funds, you invested into a real estate investment trust, so you're a part owner of 25 different apartment buildings, but you own stuff that increases in value. Okay? You're not a consumer, you're an investor. Okay? And from those assets, you get from time to time distributions or some form of income. And from that, you then buy your car. You want a Porsche. That's what you do. You spend the proceeds, but not not the money, not the right. So you own capital. You own businesses. You own something, and that generates an income or asset appreciation. Okay, so that's really how you do it over long periods of time. So what I'm saying, yeah, Master Trader's right. For most people here, if not everybody here, Forex is going to be your first part of that portfolio. But what'll happen is you will expand. You will diversify. Because what'll happen is, and it happens to everybody, in the beginning when you don't have much, you know you'll take greater risks to go from nothing to something. But then as your something grows, you'll become the normal
Incoming
human
mail.
response is that you will be afraid of losing what you have because you know what it was like when you had nothing. So now you're like, well, I can take $1 million out of my trade account and go party in Vegas. Or maybe I will take it out of my Forex account and buy an apartment building so I know I will make $10,000 a month no matter what happens. Even if I blow up my trading account, I'm still going to make 10 grand because I own this thing. And I know in 10 years I'll probably sell it, make double my money. So in 10 years I'll have another $1 million, plus I make $10,000 a month. So like, that sounds really good to me, right? So you buy that. And now you have $1 million in your trading account, and then you own $1 million asset that produces income and will appreciate over time. So like, even God forbid you blow up your $1 million trading account, well, at least you can dump your asset and be back in the game. You see what I mean? Now you're back in the game. Or now you don't have to spend so much money out of your trading account because now you're earning $10,000 in income off of your asset. So now you're like, well, now I don't have to take 10 grand a month out of my trading account. And so now that grows faster. So in 10 years, you get you have an extra $1 million from your apartment because you sold it. You bought it for one, you sold it for two over 10 years. But you collected $10,000 a month every year. So you collected $1 million. You got an extra $1 million. You get your $1 million back. Now you got to pay some taxes, but whatever. Meanwhile, because you didn't have to pull money out of your trading account as fast, now it's grown to be significantly very large. But of course, over time, you pulled it out and you invested, instead of an apartment building, you say, oh, it's too much headache. You invest $1 million into a real estate investment trust, and now someone else does all the work and all that, and you get a little less risk, or you get a little less income, but you take a little less risk and you don't do any work. So now you just invested into 100 apartment buildings instead of one, and you're like, this is so much better. Right? So now what will happen is, as you mature, you realize it's all good and you need to diversify, but you don't want to buy cars. You don't want to buy watches, right? You want to buy stuff that makes you more money. So when you retire, you want to have like 7 different income streams. Okay? I think when you're 80, you want to be paying taxes because the government is like, dude, you're 80, but you're not retired. You just keep making huge amounts of money. And you're like, I know. Okay? It's better than eating cat food and working at Starbucks when you're 80. Day-old muffins in the morning, cat food in the evening. Okay? So you want to own, guys. You want to own. You want to own. How much does your TV make you? 0. How much does your computer make you? 0. How much does your car make you? 0. How much does your watch make you? 0. How much does your house make? A lot. 5% a year doing nothing. Okay? Unfortunately, you probably spend 10% a year maintaining it. But whatever, you got to do something. Yeah. Own, not owe. Yeah. But even then, I was talking to my wife this morning about it. I said, so we locked in some cash back in March. I'm like, now's the time. Now's the time. Now's the time. 10-year T-note was below 0.5. And today it's 1.6. So literally, I swear to you, I'm sitting on the couch, putting on my shoes. It's all dark, right? My wife's enjoying her first cup of coffee. And I said, you know what? When we pulled the trigger on that thing, interest rates were 0.5. And I said, several months later, it was 0.1. So interest rates doubled. And now it's more than 0.5, so it doubled again. I said, since we accessed that cheap money, interest rates have gone up 200%. I said, we made the right decision. Cool. So what do you do with money? Nothing. Money sucks. So now you buy stuff, right? Not as a consumption item, but as an investment. So one of the things we discussed in my macroeconomics class yesterday was the difference between an economy producing commodities and an economy producing capital. Well, it's the same thing. What do you spend your money on? Do you consume or do you invest? And that is the best, that is the difference. Do you consume? Like, do you spend your money on going out to restaurants? Do you spend your money going out to bars? Like you drop $10,000 on some Cristal and some beautiful friends of yours? Do you have a giant TV but no job? Like, what do you consume or do you own? Do you invest? Okay, you're like, I don't have a lot of money in the bank, but I own an apartment building. Nice. Right? That's the difference. But what if we're talking about an economy? What does the economy do? Does it produce commodities, like a consumable commodity? Do you have an economy of potato farmers? Or do you have an economy of rocket scientists? It matters, right? Do you make planes or plantains? Cool. Anyways, let's go back to this Aussie. This is something we covered earlier in the week. Okay? Check it out. It was up. Then we trapped it into support. And then the conversation was, if you're a bull, and that's that, guys. Okay. Once again, I will suggest, if you had this planned out, technically, and let's say you're a swing trader and a day trader, okay? There's no way you missed any of this. There's just no way. Yeah. Peter, my wife is smarter than me, so she's definitely a value bull, not a ninkau poop. Right? Are you guys a value bull? Are you bullish on value or value creation? Because I'm a value bull, I'm valuable. So anyways, very, very standard, basic setups here, guys. And one of the things I was sort of joshing about looking at some of this is that you give up in here. You give up. You walk away. Remember? Wayne, when back testing a certain period? I've never back tested anything. See, I don't know what I would back test. I don't have I don't say this did this and that crossed that, so therefore I'll do this. So therefore, if I back test, I'll program when the 200 exhibits this and then that crosses below, but then back up and then I take that. How many times out of 1,000 would it work? That's not how I trade, so I don't know how I'd back test. Okay. Look, back in April, I said up for the next 5 years. So let's just highlight sort of this period. Okay. In that period, I said up for 5 years. So now what? How do I back test that? That is the only value creation right there. You see? That's it. Nothing on this chart made that point. Nothing. So at this point, what do I backtest? You either do or you do not. You buy dips or you do not buy dips. You buy at support or you do not buy at support. Okay? So I don't know what I would backtest. From this now I have monthly position trades, weekly swing trades, and day trades. And inside that there's market open trades. And then inside that there's seasonality, right? Okay? For example, because of the election, we assumed this would happen in that period. Well, how do I backtest that? Now, what would I have to do? Go back 10 years of fourth year political cycles? But I don't know if I can go back 40 years and find 10 examples like this. I just know it's going to happen because right? And we knew the sideways, the giant sucking sound. Do you guys remember? I said right here is the end. Actually, that's a giant circle. Anything could happen, right? Right here, that particular week, I said sideways till the election. So how do I backtest that? Right? So now, with the idea, like you could say, well, Wayne, there's some trades in here. Yeah. But if you didn't have this bias, if you missed the Fed meeting here, if you missed the seasonality here, if you missed the political cycle here that I analyzed to make these determinations, then like, what do you mean backtest? Because now you're like, well, how many 5-8 crosses? And like, oh my God. Okay? So inside of this, the market is either trending up, trending sideways, or trending down. And so from there, you would make decisions because you know, generally speaking, it's going to go up. So you're like, should I buy this dip? Yeah. Should I buy this dip? Yeah. Should I buy this dip? Yeah. Should I buy this dip? No. 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 And now you're waiting for the turns. So now we're going through this. Cool. So, right, I think it'll come in here. There might even be a little dip, so I got to be a little worried, but not horribly worried. And off we go. Okay? But none of it's technical. None of it is technical. When you use technical analysis, it's either a good opportunity to buy it now or it's not. Right? Yeah, but see, like Daniel's like, I'm trying to find moments like that. But you have to, there isn't a way to go back because you have to make them, you have to have been there, for example. Because there's a market psychology going on. And if you go back 7 years to a particular day, I'll ask you, what was the market psychology? What were people excited about? What were people worried about? What was going on in the headlines? What were the consequences of things? How were people feeling? And 90% of the time, when you're analyzing that, you won't know. And I think you'll grow frustrated saying, well, why did this happen and that outcome occurred when in other times something similar happened, but we got a different outcome? Like, am I using the wrong moving averages, right? You're like, no, because you don't understand the psychology of the market participants. Somewhere between irrational exuberance and irrational panic, right? Irrational exuberance and panic. Somewhere in between there is the market psychology on top of economic data, on top of fundamental data, on top of seasonality, on top of business cycles, right? And on top of technical indicators. So now you'll say, well, why is it not consistent? Because it's random. All right, people that say it's random give up. It's so easy to say it's random. Okay? It's not random. But if you try to go back and understand using, let's say, poor methods, you'll get disagreeing outcomes inconsistencies, and then you'll say, well, then it's all random because I can't figure out the connection. What you're missing is you're pulling humanity out of the data, and you're looking at a data set, and you're trying to find consistency in the data set, and there isn't consistency. Otherwise, I could program an EA and become a billionaire from my $100 investment into EA programming. I'm like, oh, well, I'll just trade every 7th 5A cross because I know 80% of the time it makes money. So, boom, I'll do it. Woo, I'm a billionaire. And other people are like, oh, it's impossible. There's no consistency. Everything is complete random. Therefore, I'm going to survive by complete diversification. Well, that's a cop-out too. Okay? What matters is you're aware and you make decisions. And then you carry out those decisions. Okay? And there's always a fog of war. Okay? Which means, if you're not familiar with the term, a general comes up with a strategy based on analysis of the preparation and the tactics used by the enemy and the lay of the land by the enemy that the enemy is occupying and where you'd like to take your troops. So you're like, there's the high ground, there's the low ground, here's the squeeze, and here's their strengths, here's their weaknesses, here's our strengths, their weaknesses, and you put all the strategy together. And then you give it to a platoon leader who's actually on the ground, can't see over the tree. There's a slight hill that he can't quite see over that. Well, that matters too. The general didn't see that. Oh, we didn't have trees in the satellite data because it was old. Well, okay, so now the platoon leader gets down there and says, okay, the strategy is to head north here, but I can't see what's on the other side of that hill. We can walk up there and get slaughtered, so we're going to have to adapt and adjust. That's the fog of war. The general doesn't know which door to kick down that has bad guys or good guys. You have to kick down all the damn doors, right? And you have to be able to adjust as you go and adapt. Okay? So a mentor of mine that someone who mentored my mentor in college, he wrote a book with this college professor called The Leadership Engine. And he interviewed a general, I think it was a general, or a very senior commander in the military. And one of the things they had to do on an ongoing basis, I think it was every 4 years, they had to have a mock global war, right? A mock war. And it's a big thing, right? Big, big thing. Like literally the whole military gets together, all branches and everything. And so they said, well, we have a computer that can calculate 1 billion variables a second. And we're going to have right? We've programmed it to make the decisions. And they're like, and then you are going to command the enemy force. And you're going to attack us. like literally tens of thousands of people. A real war. Tanks, planes, ships, the whole thing, right? And he said, so again, this is called the leadership engine, right? So he sits there and he as the general, creates the strategy. And then he teaches all, his officers about the strategy, and they practice and discuss until the officers get everything. They understand completely about the strategy. And then he backs off and he said, you make the decision in the field. Because typically there's a chain of command, right? Where you call up and they call up and they call up and they call up and then they make a decision, then they call down and then they call down and call down. So he broke the chain of command, and long story short, they took in all the variables, they made all the strategies, and then they made the process of adaptation through the fog of war, the tactics, faster. You make decisions on the fly. You don't have to report up. You already know what you're trying to achieve, so just do it. And whatever you do, God forbid, don't fail the mission, right? And they whooped the computer. They attacked the United States and won. They realized, whoops, right? Because you could adapt. So you have to have a hardcore strategy. You can't have a failed strategy. So this is where you gather your intelligence. All right? This is right out of my book. Gather intelligence, formulate a strategy. Right? So you gather your intelligence. Should you be a bull on the Aussie dollar? If you can't answer that question, then that's the one thing you need to focus on. It doesn't have to be Aussie dollar. Pick any one currency. Okay? Should you be a bull on the pound over the next 5 years or not? Make a decision. Do as much work as you possibly can. Think about it as hard as you're capable of, and then make a decision and you're done. That's your strategy. And then now you have to focus on carrying out the strategy as effectively as possible. So if you're a bull in the Great British Pound and it's bearish today, or not even today, let's just say whatever period you're analyzing, you must recognize whether this is up or down. So if you're a bull, for example, okay, if you're a bull and you have basic level of knowledge of trading, either pivots or price action, you bought this at 44-ish, right? You bought this at 44. Unbelievably straightforward, ridiculous, in-your-face opportunity. Doesn't get easier. And you'll say then, well, Wayne, how did you know that this wasn't going to work? Well, you told me you were a bull. That's all I care about. So bulls simply buy at the role reversal. You can't do that. You don't understand technical analysis. And we can fix that. It's not complicated. But if you're still saying, well, this was supposed to this told me down. No, it didn't. No, it didn't. Okay? No, it didn't. If you're a bear, you would have sold it, but cautiously. But as a bear, you'd feel a lot better selling this. Okay? But as a bull, up, 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 down, down, fire for effect. Boom. Crazy obvious, right? Unbelievably, insanely obvious, only if you're a bull. If you're not a bull or a bear, then that is also your problem. So we've uncovered two different things. You either have no fundamental bias or you don't know how to trade technically. One is fundamentals, one is technicals. You might have a combination of both, or you might be strong with one and working on the other. If you're a bear, you might have sold this cautiously and it didn't work out. Too bad, so sad, but you probably took the shot. And if you're a bull, you had days to prepare. And then, chow, gone. Nice. Okay? Okay? Cool. So then what? Well, you have to change the parameter and say, well, what did it look like for a bullish swing trader? Okay? If you're a bullish swing trader and you miss this, don't call yourself a bullish swing trader, because you're not. If you're a bull on pound and a bear on yen, and thus you've made the decision weeks ago to be a bull on this, and you miss this, you're not a bullish swing trader. You're just not. You didn't prepare, you didn't do the job, you weren't watching the trade. You're like, well, Wayne, I'm watching 32 different trades. Well, that's your problem. Now we've uncovered that problem. You don't have a strategy. You're running around like a chicken with its head cut off, making a bloody mess of everything. So stop that. So that's a weekly swing. Do we know it's going to go higher? Silly question. No, of course we don't. But you do know what you're going to do, and you know how to do it, and you're going to do it right. After that, you can't impact the market. Now, hopefully your fundamental bias is what carries you, because now you grab the current, you grab the trade wind, and now you're sailing at sea with the wind at your back, with the wind in your sails, with the current pushing you along. Yeah, you have a pretty good idea where you're going to end up. Pretty good idea. Okay? But the day-to-day, you don't know if it's going to rain tomorrow, but you're pretty sure that the current is moving at 5 knots and the wind is moving at 3 knots. You can get a pretty decent guess where you're going to end up. Okay? Okay, so there's your weekly. What about daily? Let's day trade this sucker. Oh, look at that. Pachow. So we know this was the weekly entry. We know this is the daily entry. And we know what we're thinking for tomorrow. Okay? Do we know it's going to do that? No. But you either have the plan set now or you're not doing the job properly. Okay? An aggressive trader, by the way, is going to look at this as an opportunity to front run tomorrow, today. Okay? See, it was up for London, down, and someone's going to front run it. So now you need to know where we are weekly and where we are monthly to understand where the next level of resistance is. Okay? But if you're missing these trades, it's one of two things. You have no plan, no strategy whatsoever. So you show up today, you don't even know if you're going to buy it or sell it. Fail. Bankruptcy is waiting. Okay? Right? And then the second thing that could be holding you back is you're just not doing the job. You're just not doing the job. Yeah, I wanted to buy it. And yes, it was at the central pivot point. And yes, it was at the 4-hour 21. And yes, it just made a retracement. Yes, it was the London Open. But I don't know. How did I know? Well, most likely you weren't there anyways. Right? Okay. Now, if you said to me, well, Wayne, I was concerned because it hadn't made a higher high. Okay, I get that. The thing is, the way I define it in my book is if there are bears there, aggressive bears will sell the 382. Okay. 50% is pretty good. 618 is fine. But anything beyond that, like a 786 or 100%, those are actually reversals. If there were bears, they would have sold this easily, certainly here. But the fact that you got 100% retracement says that the bears are out and the bulls are going to get in. Okay? Once again, I wrote that in a book. The book was published, 13 years ago. So I wrote it 14 years ago, which means 15, 16, and 17 years ago, I had already discovered that. So I look at it as factual as you can possibly get. That's what's happening, which means, okay, I understand you're a little conservative here because you're worried that it hasn't made a higher high yet, and you already know you want to buy the higher high, higher low. So how do you handle this? And you say, well, there's a pretty decent chance that if I catch a pullback, it will make the higher high because it's done more than the 618. Okay, pretty good chance. What else do we have here? How about the midpoint psych level? How about the 4-hour 21? How about the daily central pivot point inside your weekly swing trade plan on top of your monthly swing trade plan that has congruency with your long-term fundamental bias? Should you take the shot? Well, I don't know. It's the London Open. Should you? And you might discover that you're missing some or maybe most of that type of thought process. Okay? And you can't backtest that. Because here's the thing. If you know what you want to do, why you want to do it, and when the best time to do it occurs, and what kind of prices that you should be doing it, because that's what technical analysis is, and you still don't do it, how the heck would you backtest it? Because put it this way, let's say you backtest the perfect combination of technical indicators and you know 85% of the time you're going to make money. But you're not going to do it. You're still not going to do it. That's the problem. This is the big human equation, right? Even if you knew exactly what to do, you're probably still not going to do it. And that's what I would be working on. That's the fight, guys. That's the fight. Okay? That's the fight we struggle with. That's the demon. Bulls and bears. Not that complicated. Hawks and doves. Not that complicated. Angels and demons that we carry with us as traders. Whoa. Okay? Bulls and bears represent market participants. Hawks and doves represent central banking. Angels and demons is us as individuals, not as market participants, not the market, but us. And holy smokes, that's your real challenge. It's my challenge. So maybe I'm just preaching to myself, but oy vey. Okay? Well, how do I recommend that you address these things? I've said it 1,000 times, and I'll say it another 1,000 times from now, so it's okay. I don't get upset by it. You must specialize. You must create value. You're the world's greatest expert on the Great British Pound, or you're average. But we don't live in a middle ground world, do we? We live in a world of extremism. We live in a world of specialization. Okay? The world has never had more PhDs, which means now, instead of just having a PhD in economics, you have a PhD in a very, very minuscule microcosm of economics. Okay? Extremely specialized. Okay? When you have someone, contractors work in your house, and I've had many over the years, you know, like I remember one project they were doing on the house, there was like, I was going to say 30, but there wasn't 30. There was 12 people, right? You had the plumber, you had the tile guy, you had the electricians, you had the general carpenters, then you had the window guys, right? And they're all doing different things. It's not one old man walking around like, hey, Billy, what are you going to do today? Oh, we're just going to get to the windows. And next week I'll do the tile work. You're like, oh my God. Okay? So it's this thing you do. What is it that you do? You can say, like Morena's probably close to this, right? She is the world's greatest expert on the Great British Pound. That's that. What do you do? I know everything about the Great British Pound. I trade the Great British Pound. I'm an expert in the Great British Pound. Okay? And on top of that, you need to know fundamentals so you know what to trade it against. On top of that, you need to know business cycles. You need to know political cycles. You need to know the psychology of the market. So that's why you need to specialize. What's the psychology of Great Britain right now? I don't know. Where's Great Britain in their business cycle? I don't know. Where's Great Britain in the political cycle? I don't know. What does Great Britain's economy do and produce and trade? I don't know. And how does that trade fit in the overall expansion or contraction of the rest of the world? How is it involved and how is it not involved? I don't know. Well then, good luck. Okay? Thank you, Richard. Is it Wednesday? Oh my gosh. Does anybody feel like that? Wednesday. So it's a beautiful day outside. So I think I'm going to try to get some humanity back into me. I'm sorry for being pissy today. It's a reflection of something. But I care for you. I want you to succeed. I know you're working hard. I know this is tough. But I'm doing my best to make it at least tolerable and break it down into small pieces so that you can address it. So through these webinars, through the training and exercises we do at FX Bootcamp and all that kind of stuff. I hope all this starts coming together. Did anyone attend my macroeconomics class yesterday? I noticed when I woke up this morning that Windows rebooted my machine, and I thought for a second, I wonder if it did that while I was downloading the recording. Like, I don't even know if it was recorded now. I know it was recorded on my machine, but what happens if you're downloading it and Windows reboots in the middle of it? I think it's gone, right? So I don't know. Yeah. So I don't know. So anyways, I hope it was I hope it was enjoyable and thought provoking. So we'll take a look, and in the next one we're going to do terms of trade. So literally, how do countries negotiate, and how do we calculate based on their production possibilities curve, what a good trade is. So what would, how do we trade with another country, and how do we get these bargains? Then, of course, from that, then we're going to do business cycles. Okay. Right on, 888. Well, make sure you click the thumbs up button and subscribe and like and leave comments. And let's make this the best Forex community on YouTube. So I try my hardest every day, and I know you do too, and I'm proud of you. I'll see you guys tomorrow. Cheers.